JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 19th of February 2021. So yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff basically. But yeah, before we do that, let's quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then guys, jumping into the charts. So the idea that I was talking about for Nikkei here throughout this whole week kind of worked out a little bit, I would say, because the idea was that if this hurdle, the 30,297 territory, which is the lowest point of July of 1990, continues to somehow provide resistance, and we see those we see a daily close below this, then there is a good chance we could see a bit of a drift lower here. And well, in a way, this is what happened. The index today kind of drifted to the downside, ended up closing the day in the red. So yep, in a way, kind of everything's in line so far with that little potential correction here towards the downside. Now, I'm going to target this 29,519 zone, and just to show you what that level is, or what should I say, was the 29,519 territory. That's basically the lowest point of May of 1990, guys. So in a way, if that area somehow provides good resistance, this one right here, if it provides some good support, then yes, we could see a nice rebound and a push back to the upside. So again, something for you to keep in mind. But of course, if it drifts below this, then the next target is the 21-day EMA or this upside support line drawn from the low of the 30th of October. And then we would take it from there, of course. I mean, we could still see a nice rebound and a push higher. In case the index decides not to go further towards the 21-day EMA or this this upside support line, of course, yes, the upside would be back on the table. However, to be on the safe side, probably I would stick to the current highest point of February here, near the 30,714 territory. If we get a nice pop above this, then yes, of course, this will confirm a forthcoming higher high and more buyers could join in. But again, for now, as long as we remain below this 30,297 territory, I'll stick a little bit more towards the downside. Hong Kong's Hang Seng Index. So drifted lower today, continues to trade still. It still has around 15 minutes left of trading, but in a way it seems that it could end up being in the red. However, of course, we can see that the buyers are really trying to fight hard here, are trying to bring this index back up. Well, let's see if that works out or not. However, the idea that I've mentioned here on Hang Seng previously was that if it drifts lower here but finds good support near this area, the 30,191 zone right here, then yes, we could see a nice rebound and maybe a push back to the upside. So in a way, part of it right now is working out. So we did get that test, we did get that rebound. So can we make it, can we see a move higher? Well, we'll just have to wait and see probably, and most likely we'll have to just wait for next week. because I doubt that in the next 15 minutes on Friday something like this, like I mean a drastic pushback up here could happen on Hang Seng. So either way, for now, basically that's the little kind of game plan. In a way, we could see if this index closes somewhere around here, this could still, let's say, drift lower, depending, of course, on how the U.S. and European and the U.S. equities are going to trade today. If we're going to see a bit more weakness, then maybe we'll get a nice kind of opening gap here to the downside on Monday here on Hang Seng, and then we'll have to just look at these upside lines if one of these are going to provide some sort of support. The German index. Oh, and by the way, before we jump into the German index, I mean just a quick update on the economic calendar, what's happening today. So we did get some inflation data from Japan today. I mean, that kind of came out slightly on the better side. Still in negative territory, but yep, slightly on the better side. We also have or should I say, had already received the British retail sales. Those came out as a disappointment. So across the board, so core and headline ones, yep, those are all in the red. And well, I mean, I would say really strongly missing their forecast. So for example, if the core retail sales, the month-on-month figure for January, the previous one was at plus 0.4, the forecast was already at minus 2.6, it came out as minus 8.8. Similar story here is with the headline one. Also the expectation was for a minus 2.5, kind of, it was already a decent decline, but it came out at minus 8.2. So yeah, not a very good kind of, let's say, result here. Later on we'll have the German manufacturing PMI figures, the preliminary ones. We also have the UK manufacturing, manufacturing, composite and services PMIs, all preliminary, of course. And then later on we'll have the Canadian core retail sales also. So and if I'm not mistaken here, yep, the US services PMIs, the preliminary ones, will be released together with the manufacturing preliminary PMIs. So a lot of preliminary PMIs, guys. Could be an interesting day, I would say. Of course, we'll also continue monitoring the situation with the whole kind of vaccination situation in the US. I mean, it's not great in there right now, but yeah, I mean, not everybody's getting it. So yeah, we'll see how that's going to play out, and of course, we'll keep an eye on the whole kind of political situation in the US as well. So and its relations with China. Now, coming back to the markets here. The German index DAX here did drift lower yesterday, closed slightly in the red and below this 21-day EMA. However, if you remember, yesterday I said that in a way, if you want to go for further declines, we need that kind of break of the so-called neckline here. So the neckline here is not at one level, but I would say at an area here, somewhere between the kind of the 13,830 and the 13,866. So yeah, for now we're just kind of flirting with this hurdle. Looking at the cash index right now, we can see that the price is jumping around the 13,923 zone. So basically we are back above this hurdle, but we're just kind of bang on that 21-day EMA. So I wouldn't rush into anything yet, guys. I mean, it's very tricky, I would say, but if we start seeing a drop, let's say somewhere below this 13,830 zone, now probably that could open the door towards further declines, because such a move here would confirm a forthcoming lower low. And in a way, the idea of a double top here could work out. So, but again, at the moment we're very careful, very cautious, and yeah, we don't want to kind of rush into anything yet. Jumping into DXY, so the dollar index, after a good attempt to push higher, as you can see, it reversed back down. And if you remember this week, guys, I kept saying that yes, we of course everything looks quite positive here. The DXY is pumping here to the upside, but in order to get a little bit more excited, we need that push above the 91.24 zone right here. And as you can see, that's exactly why. So the index reversed back down, so basically it continues just to oscillate around that 21-day EMA. So that's why we're kind of currently in the neutral territory, and we're just observing the kind of the price action. Gold is also stuck. Again, it reached my target, the 1765 zone, so that's the lowest point of November. It hit the area slightly below it, and it tested the area around the 1760 mark. So yeah, I mean, good result here for the bears. However, can we move further south? That's the big question, of course. Right now, the way you could play this one out is, once again, keep your eyes on that 1765 zone. A nice good drop below it could, yep, open the door towards further declines. We do have that obstacle here, the 1760, but if that gets cleared, I mean, that's, yep, this could go further south. So, but I will start looking at lower areas if we get a drop below that 1765 zone. In terms of the upside, previously I talked about, or should I say, not previously, yesterday I talked about this little area here, this little barrier, the 1795, because in a way I do understand that we could be missing out here on a bit of a territory before, let's say, kind of before we could wait until we get a break of this downside line. So in a way, yes, that's why I'll start looking at some higher levels if we get a push back above this 1795 territory, and then we'll take it from there. But for now, it is how it is. It's leaning a little bit more towards the downside. But again, let's see how the dollar index is going to perform today, because again, if that suddenly weakens, then yep, we could see gold kind of maybe reversing back to the upside. WTI oil, so this one is interesting, very interesting. So we had our reversal yesterday, and we're kind of forming right now potential, we could be I would say, because again, I don't want to get caught out on this one, but in a way, the fact that it managed to push nicely higher yesterday created a new high for the month near the 62.25, and then reversed back to the downside. As you can see, it kind of almost wiped out the gains of Wednesday. Yes, today we're seeing the commodity trading still above the 59.61 zone right here. I talked about this level before, but let's see if we can get another slide here. We did get that slide already this morning, but let's see if we can get another one, and I will consider that idea if we see another push below that 59.61 zone right here. In terms of the upside, pretty straightforward, waiting for a pop above the current all-time high of February. Sorry, the current high of February, not the all-time high, but the current high of February, which is around the 62.25 zone. And then, yes, of course, this will confirm a forthcoming higher high, and more buyers may join in. Now jumping into Bitcoin, so that 52 territory got reached yesterday. The crypto failed to test, let's say, the or should I say, not didn't fail to test, but failed to break above the 52,577 territory. And well, I mean, that's the current highest point of this week, the current all-time high. This is where I can say for sure that it's an all-time high. Yeah, guys, I mean, for now, it's a bit of a tricky one. So as I've mentioned this week, that if you want to go for some higher levels, yes, you can. But the only thing is that don't forget we're quite overstretched here on the shorter time frame, and even actually on the monthly chart, I would say. But in order to go for some higher levels, well, wait for a pop above this all-time high near the 52,577, and then go for the upside. At the moment, I would probably be very careful. For the downside, if you want to look at some lower areas, well, maybe to go for a bit of a larger correction here to the downside, wait for maybe a drop below the 50,500 level, something around here, and then we'll just have to take it from there, and we'll have to be very careful, of course, at that point. Now Ripple, so Ripple is, well, it retraced back from the highs here, of course not the February high, but from this the high of last week, I would say, the 0.6436 territory. And yep, now it's kind of back near this upside line drawn from the low of the 2nd of February. It's a bit of a tentative one, don't get me wrong, but nevertheless, it's still kind of seems to be providing support. But if this gets broken and we see the rate, because we're talking about here XRP USD, if the rate falls below the 0.48 territory right here, marked by the high of 4th of February and the low of the 16th of February, now that's where it could become very, very interesting for the sellers, and because at the same time the rate would be placed below the 21-day EMA. And in terms of the upside, if you want to be a little bit more on the safe side, maybe keep your eyes on yesterday's high here, and if you get a nice pop above the 0.56 territory, then yes, higher levels in a way could be met. Jumping into a few pairs now, AUD JPY, so continues to push higher, or at least tries to push higher. Overall, I mean, you can see how well we have done here after we kind of broke the downtrend here. Let me just quickly show this one, what I'm talking about here. After we broke the downtrend here, the pair kind of continues to move nicely to the upside. Now, let me just quickly check something. So we do have another line here, which is taken from here. It's a tentative one. So in a way, what you could do here, I mean, what you could say is that, what we could say here is that, if we'll take this downside line here, taken from the highest point of April of 2013, if we'll take that as a kind of reasonable line here, then well, we do have still kind of plenty of space here for until we could reach this downside line. But of course, for now, from the kind of slightly maybe medium-term perspective, we can see that yes, since March of last year, this pair is drifting nicely here to the upside, so everything's kind of pointing a little bit higher. But yeah, let's see how this is going to play out. Again, for now, from the more of a shorter term perspective, if you want to go for some higher levels, well, as you can see right now, we are approaching this key resistance area, which is the current highest point of this week, and that's roughly around the 82.41 zone. And if we get a nice pop above this, this will confirm a forthcoming higher high, and of course then we'll just start targeting this little high here, the highest point of December of 2018, and that's roughly around the 84 zone. So keep your eyes on that one. It's only around 200 points away here, pips away. But yeah, it could be quite interesting. USD CHF quick update. Again the same story. I will stick to that story that I need to see that nice good daily candle staying above this hurdle, above the 0.8983, and then we could go for some higher levels. For now, I mean, it is kind of flirting with this area, also with this 100-day EMA here shown as the green line. So there is chance for the bulls to step in here. However, again, you can see that they're struggling to keep the rate above the 0.8983 zone. So if we manage to do that, then yes, great. We'll go for some higher levels. But at the moment, where I'm just observing this one because again, it's way too tricky. GBP Aussie. So very quickly here, and looking at this picture. You can see yesterday we had a fantastic move here to the upside. We've tested this 1.8024 zone, but failed to move above it. And now we're seeing today, this morning, we're seeing a bit of a corrective move here lower. And the reason why I'm saying corrective, because we're still above the 108 EMA here and above this key kind of support level, which previously was seen as a resistance. Now it's taking the role of support, and that area is around the 1.7925 zone. If this area continues to provide support, then yes, a nice rebound here could be possible. But still guys, I mean, what I would say is let me just reuse this upside line. Still, in order to go for some higher levels, guys, well, wait for a pop above this 1.8024 zone, because again, this will confirm a forthcoming higher high, and yep, then we could start targeting that 208 EMA. But at this point, just kind of be safe and don't rush into anything, because if this starts dropping lower here and breaks below this upside line, this increases the chances for a possible move lower. However, in that situation here, I would still prefer to, in order to consider the downside, I would still prefer to see a drop below this 1.7789 territory right here. And then, yeah, we could go for lower levels, because what I don't want to end up seeing here is basically somewhat of a range here in between these two levels, the 1.7789 and the 1.8024. GBP CHF, so quick update. Yesterday I talked about this one, and basically so far this 1.2530 zone continues to provide good resistance. I mean, it previously was seen as a strong area of support. Now it's taking the role of resistance. Let's see if we can actually continue having that hold up here. If we can, then maybe it could be time for a bit of a corrective move, I would say, because, well, I mean, we did have a decent rally here with, from around the mid-December. So yeah, maybe a bit of a corrective move here lower could be possible. But of course, the market doesn't always do what we want it to do, so yep, be very careful. Maybe the bulls have still have enough steam to drive this one higher. So that's why I'm gonna keep an eye on this pair today, because if we see the daily candle, for example, popping above this hurdle, it pops above it, but let's say fails to stay above this area, now that's where it could become very interesting going into next week, because maybe then, yes, we could go for those slightly lower areas here. But again, for now, it is how it is. It's more bullish than bearish, of course, but yeah, be very careful near this 1.2530 zone. Euro SEK. So just wanted to give you a quick update here. Basically, this is the pair I've looked at. Recently, or should I say yesterday, and just kind of still wanted to remind you, because again, these pairs, these kind of exotic pairs, do sometimes present themselves with nice opportunities. And at the moment, what I'm looking at here is I'm keeping an eye on this key support zone near this point with 10.009, because a nice good break below it will confirm a forthcoming lower low. But yeah, if this downside line drawn from the highest point of March of last year breaks, and then yes, we could start maybe looking at some higher levels. But at the moment, like I said, we're getting a little squeeze here, so let's see which way this one's gonna break. And finally, EURUSD. I'm neutral on this one, because again, yeah, I kept talking about this idea where basically it said that if we see a drop below the 1.2059, this increases the chances for a further move lower. Yes, we did get that break here lower on Wednesday. Then on Thursday, yesterday, I was saying that in order to be a little bit more safe on the safe side, wait for a drop below Wednesday's low. But that drop never happened, and instead we reversed higher and pushed back above this 1.2059 zone. So now basically I'm still kind of I would say I'm still kind of neutral, because again, we're kind of oscillating around this 21-day EMA. For me to consider, or should I say get a little bit more comfortable with the upside, well, I would like to see a push above this barrier, this 1.21 50 territory, 56, sorry, and then yep, higher levels for me could be met. But again, for at the moment, it is how it is, guys. I mean, I do understand it could be frustrating here, but we'll just have to wait. I mean, on the other hand, maybe some of you might say here that we could be forming a possible inverted head and shoulders pattern here, with the neckline being this one. so we have our left shoulder, could be that we have our left shoulder, the head here, and the right shoulder is forming currently. So if that's the case, still we need the break above the neckline here, and this kind of comes in line with this little 1.2156 territory that I spoke about. So yeah, keep your eyes on that one. So guys, I hope you found it useful. So thank you very much for watching and listening. I really appreciate your time, guys. I really do. So thank you very much. Thank you for your views, for your likes, for everything, guys. If you want to catch my video later on, my trader's tea time is always 13:30 GMT. For now, have a wonderful trading day. Stay safe, guys, and I'll see you later. Thank you very much, and bye-bye.